Hello, everyone. My name is Mark. I'm also known as the stock market jobber, and my mission is to teach people like yourself about how trading really works and about how Wall Street really works. So, a lot of misconceptions out there, and there is a lot of false information, bad teaching. So, at this point in my progression, I guess my career, whatever you want to call it, I've decided that I just want to teach people. I had a pretty successful career, luckily enough, in the institutional trading industry. I was brought into the industry by Mario Gabelli and traded directly for him. He's one of the greatest money managers of history, and I think at this point, I don't know how many tens of billions of dollars he manages. I was also traded directly for Steve Cohen, who's could be the greatest trader in history, and he manages I don't know how many tens of billions. And after I worked for those two guys, I went off and I was the head of trading at three different institutional money managers. So I've seen it all. Market maker, I was a market maker. I understand dark pools. I understand algorithms. I understand hedge funds. And a lot of the stuff is really not as complicated as you probably think it is. So please subscribe to Stock Market Jobber, our YouTube page here. Check out our website. And if you want to learn how things really work on Wall Street, as opposed to the mythology that's out there, I think you're going to enjoy it. Now, there's a lot of horrible technical analysis out there. And maybe it works for you, maybe it doesn't. I don't know. I don't, whatever, right? But I just talk about what goes on in the institutional trading world. And in the institutional trading world, traders don't waste their time with silly things like Gann theory or Elliott waves or Fibonacci. Institutional traders look at things that I teach at Stock Market Jobber. What are the important price levels? What are the trends? What's the momentum? What's the psychology? So today, I just want to do a brief, quick little lesson on gaps. Now, you've probably heard the expression gaps refill, and it's true. And I'm going to show you why. A gap is like something that we have over here. Now, this is Amazon. These aren't recommendations. It's just a teaching session. When a stock, this is a day. This chart is every one of these is a day. So we got to understand what we're looking at here in this time frame. So on this particular day, the Amazon closed here. The next day it opened down here. So there was a bunch of prices that it didn't even trade at. Okay. So that's what a gap is. When you see like a blank spot on a chart here where there was no trading within that particular price range. Now, in order to understand gaps, we have to understand these two basic principles about how levels work. And that is buyer's remorse can turn support into resistance, and seller's remorse can turn resistance into support. Now, let me show you here. This is a resistance level. When a market is going higher, it's because there's not enough supply to fill all of the demand, or there's not enough sell orders to fill all of the buy orders. So the buyers are forced to pay a premium. When we get to resistance, there's a lot of sellers. All right. There's enough to fill all of the demand. There's enough supply. Now, notice here how we moved higher. This is a gap, but let's not really get into that yet. And notice how what was resistance became support here. Support is when a market's moving lower, there's not enough demand to absorb all of the supply or sellers. When we get to a support level, all of a sudden there is. So resistance turns into support. This is because of seller's remorse. There are people who sold who regret doing so when the price went higher, and they tell themselves, I'm going to buy my shares back, but only if I can get them for the same price that I sold them at. So if we have a lot of remorseful sellers placing buy orders at their selling price, what was resistance can become support. Now we have the opposite. Buyer's remorse can turn support into resistance. Investors bought here. When the price went lower, a lot of them say, you know what, I made a mistake. I'm underwater on my shares here, but I want to get out, but I'm only going to do so if I can get out at break even. So if it gets back up to the price that I bought it at, I'm going to sell. So if we have enough remorseful buyers placing their sell orders at a level that was support, the level that was support can turn into resistance. So in order to understand what gaps are, we have to understand that. Seller's remorse can turn resistance into support. Buyer's remorse can turn support into resistance. You can see this on pretty much every chart that there is in the history of trading. right? So once you become a member of stockmarketjobber.com, you will learn how this stuff works. So remember that resistance can become support because of seller's remorse. Support can become resistance because of buyer's remorse. So now let's look at a closer up picture of Amazon. Now, here we have a gap down. Guess what? If we gap down, if we close here and we open here the next day, well, the stock never traded in this price range. So if it didn't trade in that price range, you can't have remorseful buyers who want to get out because it never traded there. If it didn't trade there, you can't have buyers and you don't have sellers. But if it didn't trade there, you can't have buyers. So let's fast forward, and here's an example of a gap refilling. As we start to come back up, guess what? There's no remorseful buyers trying to sell within this price range. So there's not a lot of sell orders out there. So the buyers are forced to pay a premium. There's just not enough sellers around. So they have to say, all right, well, no one's going to willing to sell it to me at 106. No one's willing to sell it to me at 107 and so forth and so on. All right, I got to pay 110. So this is a gap refilling. Now, what do we have here on the other side? We have I'm going to try to use my arrow here. We have a gap refilling on the downside. Well, think about it. If it didn't trade in this price range, no one could have sold who became remorseful. You just can't have remorseful sellers in a range where it didn't trade because the heck is that thing? Sorry about that. Eraser. All right, I'm going to go back to my laser pointer. So we didn't have anyone who sold here because it never traded there. It was a gap. So on the way down, you're not going to have remorseful buyer or remorseful sellers trying to buy. So there's going to be like a lack of support here. So no one sold on the way down here, so you're not going to have remorseful buyers trying to sell here. No one sold on the way up here, so you're not going to have remorseful sellers trying to buy their shares back. So this is a really good example of how gaps refill, and you can see it on a lot of different charts. And if you understand the basic principles that I teach at stockmarketjobber.com and don't waste your time with silly things like Fibonacci and Elliott wave, well, you're going to learn how the market really works. Now, if you're an options trader, this is phenomenal. Oh, geez, we got a gap here, we got a gap here. There's a good chance there's going to be a gap on the way down, and sure enough, there was. So this would have been a great time to buy puts. Now I know hindsight is 2020, but at stockmarketjobber.com we look at stuff in real time every day. So I could have written a book and talked about, oh, back then at this time I was great on this call and I was great on that call, blah blah blah. But whatever, that's just not what I want to do. I want to teach people in real time because I want to teach people how trading really works. I was After I was kind of quasi semi retired, I decided I didn't want to go back into the institutional money management industry because it's just a lot of stress. There's a lot of not nice people. So I kind of wanted to just do something that I liked, and I just noticed all this like really bad research being pumped out there, and this lot of misinformation being spewed. So my vision now is to teach, and hopefully you'll sign up, and you can be the benefit of my 25 years of experience in the institutional trading world. All right, let's move on now. And again, we could see gaps on a lot of charts. Here we go down here, right? This is our healthcare ETF. Gapped down, ripped right back up through it. Now, why would we rip right back through a level where there was gaps? Well, no one bought it in here or here. No one bought it in between here or here because it didn't trade there. So when buyers start to say, oh, gee, whatever news it was that brought this thing down, it's probably not as bad as people first thought, and the buyers get back into the market. Guess what? There's not a lot of sellers around. And if there's a lot of buyers and there's not a lot of sellers, well, then the sellers can go to a higher price. That's just basic economics 101. So gap down, refill the gap. And let's see, what else can we see over here? Gapped up, gap down. You can see it on a lot of different charts. Here's our Invesco's Qs. or the Qs, right? Gapped up, gap down. Look at that. So we're going to such a fast free fall that doesn't trade at these price levels. These price levels in between here and here and here and here. If it doesn't trade there, you can't have remorseful buyers trying to sell on the way up because it didn't trade there, so there's not going to be any remorseful buyers. And sure enough, we ripped right back through those price levels. So I'm just picking out a couple random charts here. I'm sure there are other ones out there that are more better illustrations, but I mean this is pretty good. But this is the stuff that institutional traders think about. Where's the support? Where's the demand? Where's the resistance? Where's the supply? What's the trend? Are we overbought or are we oversold? I can guarantee you that someone like Mario Gabelli or Steve Cohen does not look at Fibonacci charts. All right. So gapped down, ripped right back through it. No one here to sell to these buyers, so they're forced to pay much higher prices. Now, this is going to bring this up because this is one of our trade ideas that we've been talking about at Stock Market Jobber, and so far it's been a really good trade on the downside. Notice here's our example of support becoming resistance. We have our buyer's remorse. People who bought here try to sell. All right. Now look down here. We gap down on whatever news this was. It was probably earnings. Well, if we didn't trade in these price ranges, if we gapped through these price ranges, there's no one who bought who is remorseful. There can't be because it didn't trade there. So when whatever news it was brought this down, buyers start to think, oh, that sell is an exaggeration or it's overdone. I'm going to go there and buy. Well, guess what? It gapped back up. We have the fast move here because there's just not a lot of sellers around. So buyer's remorse can turn support into resistance. If there's no buyers, there can be buyer's remorse. All right. Now we move up here, and this is why I think this was a good trade idea. And again, it's worked out very well for a lot of our members. We traded up here on news, on earnings, which frankly were really not even that good. But we can see here our principle of resistance becoming support. Now, there's a good chance there's not a lot of support in here. Resistance becomes support because we have sellers who regret selling when the price goes higher, trying to buy their shares back. If it never traded in here, no one sold it. So there's not going to be those remorseful sellers trying to buy their shares back. And it creates a lack of support, and sellers are going to be forced to offer their shares out at a discount. So that's it, everybody. There's a lot of mythology on Wall Street, but one of the things that is true is if you hear someone say gaps refill, that is an aspect of supply and demand. And if we look at every chart, we got to look at it through, or any chart we look at, we got to look at it through the prism of what does it tell us about supply and demand. It's not about identifying like weird patterns. It's not about, Elliott wave this or Gann theory that. It's about, hey, what does this tell us about supply and demand? Look, down here, right? No buyers, rips right back up. So that's it, everybody. Once again, my name is Mark. I am the Stock Market Jobber. Please subscribe to our YouTube page. Please check out our website, stockmarketjobber.com, and I hope to see you soon there. Thank you, everyone.